Hello folks, welcome to Pro Trader Strategies. It's Friday, August the 6th. We are an educational company, so if you guys want to learn about options trading, hit that subscribe button over there. Also, there's a little bell there that gives you an indication or a signal that I'm going on live. I'll do that throughout earnings season. I'm not always doing just the scheduled time here at 8:30. We also do a Thursday webinar as well, so if you want to check those out, go to Pro Trader Strategies. And comment over at the side, you guys, while I'm going through this. If you want me to look at a specific stock or have a question about a strategy or something like that, throw it over there. I'll be happy to chat with you guys, and smash that like button for me. It does help out. All right, let's get on with the economic data, see how that's impacting the overall markets, because we've got a slew of stuff going on. The leading economic indicator out of Japan coming in line with expectations. That's good. Here in the United States came out at 0.7%. That's what gives us a little bit of a boost here throughout the day, as it's showing a trajectory of strength since the pandemic began. So that's exactly what we want to see. And it being Friday, it's the first Friday of the month. We got our unemployment numbers. Those unemployment numbers are unemployment Friday there. We got 943,000 hires, expected to be 870,000. Nice beat on that front by 70,000, and a revision to last month's number by about 80,000 there, but almost 90 to be quite honest. So huge revision to the last month's number. Remember, we touted that when we were expecting that one to come in closer to 1 million hires. Well, with the revision, we got up in that level, and today's number looking pretty good. All in all, unemployment rate coming off to 5.4% from 5.9 is what we had before. So obviously, those people getting hired, lowering that overall rate there. And wholesale inventories ratcheting up just a little bit to 1.1%, expected to be 0.8%. So we don't want to see these inventories jacking up in the summer when nobody's really buying. They're not getting ready for the holiday season at this point. That's going to be coming in and around August, September, where they start seeing those inventories ramp up for the holiday season. Right now, a little bit early, especially with the supply chains and everything else that people have been talking about, that demand pent up. Well, it's not really showing through on these inventories number that people are buying. All right, so let's get on with the markets, and remember to change it over. Slide that around there. All right, crude oil is coming off. Remember last we were earlier this week talking about the inventory numbers in crude oil, and there was a huge build on that. So not surprising, finally starting to see this crude oil start to roll over here a little bit. Remember last, on Wednesday, we saw that it was supposed to be a drawdown of about 3 million barrels, and we got that build of about almost 4 million barrels. So a huge supply in there, and wholesale inventories driving up is going to make us start to wonder if the manufacturing sector is going to be, at full capacity. When we see these capacity numbers on the manufacturing sector, they might start slowing down just a little bit if we're not moving inventories. Gold futures are coming off. Now, we are seeing strength in the dollar, and that would make us believe that there would be a little bit of weakness in the dollar-denominated assets like crude oil, which we're seeing some weakness there, and here in gold. But we're not seeing that much strength in the dollar. It's only about a penny from the lows of what we saw during the pandemic there. So that's not really what's driving this market. I think it's more of a flight to safety here, or a flight to risk on trade is what I want to say there. Bitcoin is moving a little bit higher, only by about 1,000 points. I believe it's going to have a struggle to get to those all-time highs. I think that the risk is to the downside in Bitcoin. Now, that's not saying I don't know that. I think that Ether and some of the other coins are going to do well. I just think that there's a stigma behind Bitcoin that's going to cause it a little bit of a tough row to hoe there. And bonds coming off by over 1.5 points as we speak. VIX is falling. We got a mixed bag here, though. Remember, we were talking about some strength and risk on trades here in the NASDAQ driving the markets to the upside. Well, we got a candle that is an engulfing pattern here, that if we start to really lose some steam here, I would even say, just a few more points at the end of the day there, that settlement is going to look like a dark cloud, which an engulfing pattern is very bearish, especially at the top of these moves like that. So we could be seeing the NASDAQ and the rest of the market start to correct going into next week. Now, I've been saying for a while now that the risk is really to the downside, and I was getting a little bit of feedback yesterday that how can I keep saying the risk is downside when we keep making all-time highs? Well, we're grinding a little bit higher here, but what I'm talking about is, if we're talking about measured moves in the markets, I would say that the measured move would be to the downside more so than the upside, especially with the markets here at the all-time high. We've kind of been grinding it out here. We're seeing a little bit of price acceptance up here that we've talked about, where we're accepting value at these levels. But again, I think that the risk is going to be to the downside, only because we're seeing these earnings come out, right? And this is a telltale where we've seen the folks come out with better than expected earnings, maybe not given a great forward guidance, and they've just gotten pummeled from it. We saw that with even Caesars and the casino stocks, and how they've streamlined the process, increased their margins, despite the fact that they can't get people in the doors because of a restriction on the amount of people that can stay at their hotels. I think they're at 50% occupancy, but their profits were up by 40% year over year. They had the best year ever, and that's with 40% occupancy. That's just insane. So going forward, when people really start getting out there, we start talking about these roaring 20s where people have that cabin fever and start getting out, that's going to really affect Vegas. And I think that going forward, Caesars with 40% occupancy and then fixing their margins, I think the rest of the folks there in Vegas are going to do the same thing. They had $1 billion in EBITDA, which is earning before taxes, interest, and depreciation. All right, so that is huge, especially when they're not at full capacity. All right, so today we're finally seeing the bonds move to the upside. Keep in mind, it is a Friday holiday. We could see some weakness here throughout the second half of the day going into the close. So keep your eyes out for that. Mixed bag here. Overnight was pretty long for the most part, but we got that economic data coming in today. That's what gave us a spike to those all-time highs there in the E-mini S&Ps. But we're starting to kind of digest all of this information, and it probably isn't as rosy as everybody is saying, because they're probably looking at those inventory numbers and saying, we're getting some hires going on. We're seeing some wage inflation going on, but those folks are not buying, is what it feels like there. All right, now Bank of America, you guys remember I had on the put diagonal in this that I actually used as an example during the webinar for the put diagonal, so please go check that out. And this is actually going to be talking about a rolling strategy, right? A put diagonal is bearish. You're buying a longer duration put and then selling a nearer duration put in order to finance some of that long put. I'm trying to basically lower my cost basis on this trade. And originally I had on the AUG, all right? So the October are the 43 puts that I bought, and I had sold the 36 puts in the August for 43 cents. The whole package I paid $5.32 for, but with those 36 puts that I had sold against my long duration puts, the long puts, that 36 put I collected 43 cents. I got out of those this morning for 7 cents, all right? And I rolled that out in time to the September and sold the 36 puts again in the September, though, for 34 cents. So I'm just lowering my overall cost basis on this trade by about 70 cents, let's call it, just as a ballpark there. And the 43 puts that I'm long, that I originally paid $5.75 for it before I subtract out that 43 cents for the other ones, but the $5.75, well, I've lowered my overall cost basis on those puts by 70 cents, so I own them for about $5. So that's how we're going to stay with this, stay mechanical. Now, a break above this simple moving average is going to get me a little bit nervous and probably shake me out of this entire trade here. I'll probably leave on the short puts, but I'll pull the ripcord on the long 43 puts if we start settling, looking like we're going to settle above this 50-day simple moving average, because then that is going to be signaling a bullish trend that is imminent. And when I was expecting this to make a little bit more of a move to the upside, I was going to play around with some of this after the earnings and maybe do some covered calls in this, but volatility is really starting to come out here. So I'm not out of the woods on that one, because I do have that position in there where I am long the underlying. So with long calls there. So I want to stay mechanical with that and lower overall cost basis on that trade, just to try and claw my way back to profitability on a trade that is not necessarily going my way. And if you guys remember on that one, I had on the long calls sold some puts yesterday to help finance that. I was thinking about getting some covered calls in there, but because I'm long so far way up there near the point of control above us, there's no covered calls that I can sell really to make it worthwhile or have any value in those. And that's about it for you folks. Check out the webinar that we did yesterday. It is on the short iron butterfly. If you've ever been interested in collecting a credit or stretching that risk parameter just a little bit, well, the iron condor and the short iron butterfly, the short iron condor and the short iron butterfly are great strategies for a newer trader to get involved in because they're limited risk, and you can take advantage of this high volatility that will kind of open your eyes to options trading in a different way, I hope. That's about it. All right, so please subscribe over there, hit that bell so you get notifications if I pop on here like late in the day when I'm talking about earnings trades or anything else that I find to do. Make sure you got that bell so you can get that notifications. Comment over the side. I'll circle back around for you folks, make sure everybody's clear of concept, and smash that like button for me, please, before you go. So if you can't take that, take it easy. Have a good weekend, folks.